From grades in school to credit scores in life, the numbers we chase change, but the game remains the same. My goal for this video is to explain credit scores in the simplest possible way, so stick with me because in under 7 minutes, you'll understand exactly what credit scores are, how they're calculated, and why they're important. Let's dive in. To start, let's talk about why we have credit scores. Back in the day, before the existence of credit scores, the only option lenders had to determine if they could trust a borrower to repay their loan was to rely on personal references or their gut instincts. And as you can imagine, this process was subject to racial, gender, and class bias. As the lending industry got bigger, there was a need for a more efficient and equitable way for lenders to evaluate which borrowers they could trust. In 1989, a company called the Fair Isaac Corporation, which now goes by the name FICO, came up with a solution. They created the very first standardized credit scoring system in the United States. Although there are still some challenges with the FICO scoring system, which we won't get into in this video, it was a big improvement over the more subjective methods that were used before its introduction, and the three major credit bureaus, which are Equifax, Experian, and TransUnion, quickly adopted this scoring model. Fast forward to today, more than 30 years later, although other credit scoring models and versions have been introduced, FICO scores remain the most widely used method for evaluating creditworthiness in the US. Now let's understand the FICO score a little better. Your FICO score is a number that ranges between 300 and 850. Now, I know these numbers sound oddly specific, and honestly, I couldn't tell you how they came up with them. It's almost as if they picked random numbers out of a hat just to confuse the hell out of us. But anyway, it is what it is. This score serves as a tool for lenders to determine the level of risk associated with lending money to you. A high credit score indicates to lenders that you're likely to repay borrowed money on time, which makes them more willing to offer you a loan with favorable terms. A credit score of 700 or higher is looked upon favorably by most lenders. On the other hand, a low credit score indicates a higher risk of not repaying borrowed money. In such cases, lenders may charge higher interest rates to compensate them for the increased risk they're taking on, or alternatively, they may deny you the loan altogether. You can think of your credit score as your report card of your financial life. Just like getting good grades can open doors to academic and professional opportunities, a high credit score can open doors to better financial opportunities. Now let's talk about how FICO scores are calculated. FICO scores are calculated based on information found in your credit report. The specific formula for calculating a FICO score is proprietary and not publicly disclosed. That said, FICO has provided some general information about the key factors that influence your score and how important they are to your score. The FICO score is calculated based on 5 components. First is payment history. This is the most important component, making up 35% of your score. It looks at your history of making on-time payments on all your credit accounts, including credit cards, loans, and mortgages. Late payments, collections, and bankruptcies can hurt your score. Next, we have amounts owed, which accounts for 30% of your score. This component looks at how much money you owe compared to how much credit you have. This is known as your credit utilization. So if, for example, your credit card had a limit of $1,000 and you used $500 of it, your credit card utilization ratio would be 50%. Credit agencies look at the credit utilization ratio of all your cards combined and each card individually. Your credit utilization ratio signals to credit rating agencies how effectively you're managing your credit and how reliant you are on borrowed funds. It's recommended to keep your credit utilization below 30% and for excellent credit scores below 10%, but higher than 0%, just so they know you're actually using the card. Next, we have the length of your credit history, which accounts for 15% of your score. Generally, a longer credit history is seen as more favorable as it provides a better track record for assessing your creditworthiness. Next, we have credit mix, which accounts for 10% of your score. Lenders like to see a diverse mix of credit types, such as credit cards, installment loans like student loans or car loans, and mortgages. Having a variety of accounts can have a positive impact on your score, but with it being such a small component of your overall score, don't fixate over it. You definitely shouldn't go out and get different types of loans if you don't need them. And finally, we have new credit, which accounts for the remaining 10% of your score. This factor looks at recent credit inquiries and newly opened credit accounts. Opening multiple new accounts in a short period can negatively affect your score because it may suggest you're seeking out a lot of credit at once, and this is seen as a red flag. So why are credit scores important? If you someday want to buy a car, own a home, or even start your own business, you likely need a strong credit score to help you achieve these goals. Credit scores affect your ability to borrow money and how much it will cost you. The difference in interest rates you'll receive with a credit score of, say, 600 versus 700 are extremely significant, and on something like a mortgage can save you hundreds of thousands of dollars. But it's not just lenders that are interested in your credit score. Landlords and even employers may look at your credit report to make renting or hiring decisions. So how do you check your credit score? To check your FICO score, start by contacting your credit card company. Many offer free access to your FICO score as a cardholder benefit. Some websites offer free credit monitoring and provide access to your credit score. For example, Credit Karma provides free access to your Vantage score, which is a different credit scoring model, but is often similar to your FICO score and can still give you a good idea of your creditworthiness. Also, you're entitled to a free annual credit report from each of the 3 major credit bureaus through annualcreditreport.com. And I'm almost up on my 7 minutes. Hopefully this video helped you better understand credit scores, how they're calculated, and why they're important. And if it did, please don't forget to like and subscribe to support this channel. It would mean a lot to me. Thank you for watching and see you in the next video. Bye for now.